Welcome back to Investing Talk Podcast. Today we're zeroing in on a truly fascinating and frankly, uh, quite wild situation with 180 Life Sciences. The central question we're tackling for you today is this actually a good time to buy?
It's a really unique case, isn't it? Bridging two very different worlds in a way you just don't see very often. To understand it, we've pulled insights from several recent financial reports, things like Simply Wall St, Ticker Snipe, and a detailed independent stock analysis. They all just came out, August 2025.
Right. And our mission today is really to cut through all the noise around this company. We'll explore the massive, almost unprecedented shifts it's undergone and try to identify the core opportunities and, maybe more importantly, the significant risks for anyone even thinking about this stock.
Yeah, it's a lot to unpack. Think of it maybe as a blueprint for understanding volatility in today's market almost.
Okay, let's get into it then. 180 Life Sciences. Originally, it was a clinical stage biotech company, right?
That's right. Their focus was pretty clear: treatments for chronic pain, inflammation, that sort of thing, other inflammatory diseases.
A pretty standard, though obviously high-risk biotech path. But then things changed radically.
Yeah.
What kicked off this seismic shift?
Well, what's really fascinating here is just the sheer scale of it all and the speed.
The speed, too.
Exactly, the speed and the scale. Back in August 2025, they announced these very large private placements.
Okay. How large are we talking?
We're talking over $425 million raised through common shares and also these pre-funded warrants.
Right, pre-funded warrants.
Yeah.
Those are like options, basically, to buy shares later.
Sort of, yeah. They let investors buy shares at a set price down the line, often used to get cash up front without, completely diluting everyone right away. And alongside that, they issued $156.25 million in convertible notes to an institutional investor.
Convertible notes. So debt that can turn into stock later. More potential dilution then.
Exactly. Adds another layer of future dilution potential for sure.
Wow. That's a staggering amount of money flowing into a biotech.
But it wasn't just about the cash, was it? Sounds like the leadership changed drastically, too. Precisely. At the same time, there was this complete overhaul of the board.
An overhaul?
Yeah, new directors brought in. And interestingly, their experience wasn't typical biotech stuff. We're talking finance, energy, capital markets.
Finance and energy. Not exactly drug development.
Right. It wasn't just a little shuffle. It clearly signaled an intentional shift in the company's focus, maybe even its whole market position. Like they were moving away from that core identity.
Okay, so massive cash injection, new board with different expertise, and the market, I assume, noticed.
Oh, I noticed. Big time.
The sources mentioned an explosive reaction.
Absolutely. Initially, the stock just soared. Went up by 204.8% almost right after the news broke.
200%.
Yeah. But wait, that was just the start. A few days later, it surged again. This time, an astounding 229% intraday.
Intraday. Wow. What drove that second massive jump?
Well, that was driven by a really surprising new strategic pivot. Get this, institutional Ethereum accumulation.
Ethereum, like the cryptocurrency.
The very same. The company disclosed it was holding, let me check the number, 82,186 Ethereum, valued around $349 million at the time.
Hold on. A biotech company is holding $350 million in Ethereum.
You got it. And they promptly rebranded themselves as ETHZilla.
ETHZilla. Seriously.
ETHZilla.
Okay. Wow. So from chronic pain treatment to crypto assets. That's quite the leap.
It's a huge leap.
So they're calling it a crypto biotech hybrid now, aiming for, what was it, on-chain yield generation via electric capital.
That's the line, yeah.
What does that even mean, practically? Is this a real business model or just speculation?
Well, that's the million-dollar question, isn't it? Or maybe the $350 million Ethereum question. If we connect this to the bigger picture, the whole investment story for 180 Life Sciences has just fundamentally changed completely.
Okay.
Now, on the surface, you could argue the new money, the new leadership, maybe that eases old worries about cash runway, regulatory stuff that plagues small biotechs.
Right, having cash is better than not having cash.
Sure. And for a certain type of investor, this pile of cash plus the Ethereum, it looks interesting. Almost like a brand new digital asset fund, but, wrapped in an old biotech shell.
A fund disguised as a biotech.
Kind of. And that on-chain yield generation bit suggests they're not just going to sit on the Ethereum. They want to make money from it, maybe lending it out, DeFi stuff.
Okay, so like earning interest, but with crypto.
Basically. So if you're bullish on Ethereum, this looks like a leveraged bet on crypto going up.
So yeah, on one hand, maybe less risk of running out of money immediately, but What about the actual business? What is the business now?
And that, I think, is the most critical question for anyone looking at this. What are they actually doing now? Sure, the balance sheet looks bigger with all that Ethereum and $238 million in actual cash.
Which is a lot of cash.
It is. But the company's still unprofitable. There's no clear revenue stream from, traditional operations.
And the biotech side, they're just
No.
gone.
Reports say it's being de-emphasized, which sounds like code for. Yeah, probably not the focus anymore, if it's a focus at all.
So they've essentially swapped the risks of drug development
Uh-huh.
for the risks of crypto asset management, which are also pretty significant risks.
Absolutely different risks, but just as potent, maybe even more volatile.
Right. No steady revenue, just this big pile of cash and crypto. Seems like a recipe for, well, volatility. Extreme volatility.
Indeed. And remember those convertible notes. The capital structure is now highly leveraged because of those.
Okay.
And what's more, there's apparently a planned $500 million stock offering coming.
Another $500 million on top of the $425 million.
Seems so. The goal appears to be bolstering that Ethereum position even further.
Wow. And what does all this stock issuance do to existing shareholders?
Well, that's the kicker. The share count has just exploded. It's up 337% year over year.
Ouch. Massive dilution then.
Massive. If you held shares before this whole pivot, your piece of the pie just got way, way smaller.
And cash flow now depends entirely on the price of Ethereum.
Pretty much. Highly dependent on the market value of those crypto holdings, which, as we all know, can swing wildly. Huge exposure to crypto volatility.
So it really feels like any biotech expertise they had, any edge in that field, it's basically irrelevant now. They're swapping it for the very different world of asset management and crypto speculation.
That's exactly what it looks like from the outside, based on these sources. The abrupt shift pretty much erodes any prior sector expertise.
It's a huge gamble then.
A very high-stakes gamble, purely on Ethereum treasury management. And yeah, it paid a ton of market attention, brought in speculative money.
The meme stock crowd, maybe?
Possibly, but it's also, predictably raised a lot of skepticism among more traditional investors about whether this is even viable long-term.
It feels less like strategy, more like becoming a vehicle for speculation, detached from fundamentals.
That's a good way to put it.
And the stock performance reflects this, right? You mentioned the surges, but it's been a roller coaster overall.
Oh, absolutely. Nothing short of a roller coaster. We saw that 229% intraday surge, trading between, $4.88 and $12.74.
Yeah.
And then almost immediately, a pre-market plunge, down 27.85% after an 80% surge the day before.
It's just extreme. Even for biotech, which can be volatile, this seems next level.
It really is. And that extreme volatility, it screams speculative fever, not fundamental stability. The technical indicators kind of show this chaos too. The RSI, the Relative Strength Index, it's neutral, around 64.
So not technically overbought or oversold.
Right. But the MACD, that's moving average convergence divergence, it shows a bearish divergence.
Which is a warning sign.
Often, yeah. It suggests momentum might be weakening even if the price went up recently. Could mean a drop is coming. And the Bollinger Bands stretch way out to the extremes, which signals, super high volatility and maybe a snapback, a reversion to the mean.
Likely downwards given the run-up.
Potentially, yes.
So with all this going on, this crazy pivot, the volatility, can you even use traditional valuation metrics like PE ratios? Do they even apply here?
That's a really crucial point. Things like price to earnings or PE, price to sales, they're pretty much useless here.
Because there are no earnings or consistent sales.
Exactly. Almost none from any core business.
Yeah.
The only metric the sources really mention is price to book, PB, and it's 7.90.
7.90. Is that high?
Extremely high, yeah. For comparison, typical asset holding companies, even other biotechs, they would have much lower PB ratios.
So what does that high number suggest?
It likely reflects a big speculative premium or just plain overvaluation. The market's pricing it way above its tangible assets, probably because of that big Ethereum stash.
Right. The value is tied to the crypto, not the business itself.
Largely, yes.
So analysts must be tearing their hair out trying to put a price target on this thing?
No, absolutely. The uncertainty is immense. Analyst forecasts, they project this incredibly wide range for the share price.
How wide?
Get this. From a low of $1.07 to a high of $186.90 per share.
Whoa. $1.87. That's
Yeah.
good again. That tells you nobody really knows, doesn't it?
It screams extreme uncertainty. Yeah. because the model is now asset-driven. It's book value and, critically, crypto market swings that are driving the valuation now, not traditional business stuff like profits or operational growth.
And didn't one source mention something about performance after huge surges like this?
Yes, good point. A backtest apparently showed that after a 229% intraday surge like they had, the performance afterwards tends to be really poor. Low win rates over the next 3, 10, 30 days.
Another sign it's just short-term speculation driving those pops.
Seems like a strong indicator of that, yes.
Okay, what about insiders and institutions? Are they buying into this new ETHZilla vision?
Well, when you look at insider activity and institutional sentiment, the picture gets even clearer and maybe a bit concerning. Both insider ownership and institutional ownership are remarkably low.
Hello.
Insiders just 0.81%. Institutions hold only 0.37%.
Wow, less than 1% for both. That's tiny.
It's very low and very telling. It suggests a real lack of conviction, both from the people closest to the company, the insiders, and from the big, long-term investors, the institutions, who usually do heavy research.
Their absence kind of speaks volumes, doesn't it? Signals maybe deep concerns about stability or the future.
It often does, yes.
And what's the vibe on social media? Is everyone buzzing about ETHZilla, or is it more divided?
Oh, it's intensely polarized, according to the sources tracking it.
Polarized how?
Well, on one side, you've got people calling the crypto pivot visionary, maybe a smart move into the future of corporate finance. They see huge potential if Ethereum takes off.
The true believers.
Right. But then on the other side, you have lots of people expressing profound skepticism. They see it as just reckless, abandoning a core business for pure crypto speculation, like a desperate Hail Mary, not a real strategy.
So a huge gap between the bulls and the bears there.
A real chasm, yeah, between the believers and the deeply suspicious.
Okay, so for investors trying to navigate this, what are the key things to watch out for?
Yeah.
The upcoming catalysts that could move the stock.
Right, catalysts. In the short term, you're definitely watching for results or updates on that Ethereum strategy. How's it going? Are they actually generating yield?
Okay.
Then, obviously, more potential for extreme volatility around earnings releases, which will probably just highlight the lack of traditional revenue again. Also, any news on further financing, like that $500 million offering, and maybe any announcements about leftover biotech stuff, if anything's still happening there, or if they buy even more crypto.
And longer term, what drives it then?
Longer term, it feels like it's almost entirely about the crypto market cycles. Where does Ethereum's price go? What happens with crypto regulations?
Big unknowns there.
Huge unknowns. And fundamentally, can this new asset management model actually sustain itself? Is it a viable long-term business?
Right. So let's bring it all together for our listener. Based on everything we've dug into from these sources, is 180 Life Sciences, or ETHZilla, a buy right now?
Look, based on these reports, it really seems to represent a classic high-risk, event-driven, speculative play. That's the bottom line.
High-risk, speculative.
Yes. Could there be potential for big, fast trading gains if Ethereum surges or that meme stock sentiment kicks in again? Sure, maybe. But the actual fundamentals, the business strategy, consistent earnings, operational focus, they're just notably lacking right now.
Seems like a huge understatement.
Well, yeah. The sudden pivot, the massive dilution we talked about, the uncertain revenue, the huge exposure to crypto swings, it just makes it seem profoundly unsuitable for most long-term investors.
Okay, so if it's not for long-term investors, who is this stock for? Who might actually find this attractive despite all these massive risks?
Honestly, it feels appropriate only for short-term trading by highly risk-tolerant speculators, people who fully understand the enormous risks involved and are absolutely willing to take them on.
So gamblers, basically, or very specialized traders.
People comfortable with and maybe even seeking out maximum volatility. It's explicitly not recommended for long-term investment. The dilution, the lack of clarity, the unpredictability, it's just not a long-term story right now.
What a ride, huh?
Yeah.
From trying to cure chronic pain to becoming ETHZilla, holding digital assets, chasing crypto yield.
It is quite the transformation.
It's such a stark example of how fast investment narratives can shift these days and how incredibly crucial it is to really, really understand what you're buying or maybe what you're getting yourself into.
Indeed. It really leaves you wondering, doesn't it? In this era of, rapid tech convergence, financial innovation, how much pivot is too much?
Yeah.
At what point does a company lose its core identity completely and just become, well, purely a vehicle for speculation instead of something creating actual sustainable value?
That's a really good question. Something every investor probably needs to think about more these days. Definitely food for thought. Thank you for joining us on Investing Talk podcast. We really hope this exploration of 180 life sciences gave you some valuable insights. If you found this discussion helpful, please do hit that subscribe button, give us a like, and maybe leave a comment with your thoughts. Your support really helps us bring you more of these analyses. Also, if there's a specific company you'd like us to look into for a future discussion, definitely let us know in the comments below. Until next time, stay informed and invest wisely.